Okay, let's start the class. As you can see from your session-wise progression file, we had ended the other day in the middle of the discussion of the Donahue versus Stevenson case, and we are doing Cleopatra. Sorry, I keep saying Cleopatra. It's actually we are doing Cleopatrix. Practice. It's like, so what we are doing here is you have to be careful about this fact that although here we are talking about this file, this file is called Cleopractice Donahue versus Stevenson, but in the exam you will not get this, so just a reminder, okay? So I can't show you the full name of the file, you can see it here, okay? So this kind of Cleopractice with the Donahue versus Stevenson case, the facts of that case. In the exam, of course, you will get a question which will be like the question over here in all the other files we'll discuss. But this Donahue versus Stevenson part will not be told to you. Just to refresh your memory. I've just named the files like that because it's easier for me to locate it. But when you're practicing, please remember that this will not be mentioned in the exam. You will have to figure it out. Do you understand? You will have to figure it out that the facts given in this particular problem are matching the facts of Donahue versus Stevenson. Okay? So we continue now. We were at the stage of evaluation. So Cleo has 4 parts: claim, laws, evaluation, and outcome. So we were in the evaluation stage. You can play it back in the previous session's recording. And so what we can see is that, so what was the reason? So remember, the brewery was, in this case, the beer was brewed in Budapest. So the beer is manufactured in Budapest, which is very far away from London. Okay, it's on the eastern flank of the European continent of Western Europe. So it's basically what we call Eastern Europe, and this is in London, which is right at the end of on the western beyond the western flank of the European continent, right? So very far away. But the point that we're trying to emphasize by giving this kind of fact pattern here is that proximity in tort law, the idea of proximity, which generally would give rise to a duty of care, at least in the way that the law is formulated when this case is being decided. So proximity does not depend on physical distance. It depends on an analysis of the circumstances, which creates a situation where you will have to evaluate and see whether the situation is such that any lack of care on the part of the defendant, that is the beer maker, is likely to cause injury to the final consumer, who is in this case the plaintiff or the claimant, right? So how did we determine that there is proximity in this case? Because once the beer is packed in the factory, nobody ever opens that beer bottle until the final consumer buys the beer in a bar, right? So the beer bottle is shipped, it goes across countries, goes through customs between Hungary and Hungary is in the EU to Britain is now outside the EU, so it'll go through customs in Britain, and then it'll go distribute to the different bars and gets picked up there. And then, so when the customer buys it in the bar, the bartender opens it, and then you get then the consumer consumes it. So in the circumstances, we find that there is no intervening no intervening event before the customer opens it at the bar. So therefore, this is what is called in tort law. So whenever possible, and you're answering a law paper, one good practice, which is one thing which is considered good practice, is to use as many Latin terms as possible. But of course, they have to be relevant. You can't just throw in some Latin term which is not relevant, right? So what is relevant in this case is the expression novus actus interveniens. Okay, so novus is new, actus is act, and interveniens means which comes in between, intervening. So we analyze the circumstances and we find that there is no novus actus interveniens. So therefore, now you can already see the case is going to be decided in favor of Jill, who is the fictional character here. Jill she got sick by drinking this beer, which had a dead snail inside the bottle, right? So you can see that we can go one by one and we can make this F11. Yeah, okay, so you can see that, okay, so it's not, whatever it is, okay, so there are two friends who are going there, Jill and Diana, and so Diana is the one suffering the physical illness. I got the name wrong. Okay, so she has suffered damnum in this case, okay. So now she has sued for negligence, remember that as well, because in this case what happens is that it is two friends have gone to the bar, and it is Jill who bought the bottle, so she, and Diana is the one who fell sick. So Diana cannot sue the manufacturer because the privity of contract is, the contract is between between Jill, her friend who bought the beer, and the manufacturer. So, and since Jill was not the one who was injured, it is Diana who was injured. So, because of the privity of contract, she cannot bring a breach of contract claim, right? So, therefore, she cannot bring a claim under contract law because of privity of contract. So, remember that principle as well. So, now she brings a claim in negligence, and the law of negligence, as developed by the courts, is, remember that there are two things we need for, there's only one thing we need for a tort to have taken place, and that is injuria, that is violation of a legal right. But in certain cases, in order to make the claim actionable in a court of law, so there are two different things. Whether or not a legal right has been violated and a tort has been committed, that is clear if you have injuria, that is violation of a legal right, not necessarily involving any damage. But then, in the case of negligence, you also need damnum in order for the claim to be actionable. So when you're bringing a claim to the court, okay, if you just want to have a discussion whether your right was violated, that's fine. But if you want to bring a claim to the court, it has to be a type of claim that is recognized by the court to be actionable in the circumstances. So if you have damnum, that is actual, tangible, physical harm, okay, then you can have physical harm or nervous shock, which is psychiatric harm, or even a loss of money because of some direct causation, financial loss. All of this can be considered as damnum, but it's actual, tangible, actual damage, okay? Actual harm. So then, therefore, negligence, in this case, a negligence claim is actionable because in this case you actually got physical harm because she fell sick. She had gastroenteritis, and then she had nervous shock. So these things were clear, and there were basically, it's a direct and reasonably foreseeable consequence of the breach. We should add the word reasonably here. This is why you should always always use the latest version of the notes from the file. Okay, I keep getting the requests in the email, which I'm just ignoring, but once again, I'm repeating to everyone and the class monitors especially. Okay, Miliko and Ian. Please remember, anybody having any problems accessing the notes should immediately mention on the, because I keep getting the requests in my email, right? I don't do anything about it because I just think it's an accidental request. So the trick, as I told you, is not to directly click on the link I gave you in WeChat, but to copy that link and paste it in a new browser tab. Okay, in your, where you're not logged in, then you can paste it there and it should open. If it doesn't work, immediately let me know through the WeChat group that the link is not working. It should work till beyond your exam. Okay, now, yeah, so we can see here there is a, so that's why you see why you should always use the latest version, because I have just changed a little bit of the language here. It should be reasonably foreseeable. Okay, so the outcome, as you can see, once you do the evaluation, then the outcome is quite clear, but we still want to teach you to do this, since you're doing it you're quite new at this, so it's better to have that habit of the practice of following the entire structure. So in the outcome, you also remember you have to write the ratio decidendi. This part is not in the book, this framework. That's why you should study the framework from the cases I've given you, all the practice cases, and and not the book, because my framework has a couple of extra elements which you need to write in the exam. Right, so this is the situation here. As you can see, ratio decidendi of this case, most important part, the manufacturer of goods owes a duty of care when the product is reaching them without any possibility of intermediate inspection. There is no novus actus intervenience. So you have to look at the circumstances in every case. If it is something where there is multiple rounds of inspection of the actual product by opening the bottle, etc., then you can say that there are many other factors which could have caused that snail to get in. A snail could have got into the bottle in many other ways. So it's not directly due to the mistake or negligence of the manufacturer. But in this case, that is not true. So you have to analyze. So in this case, we say that Diana is likely to succeed in her claim, right? So remember that in all these cases, so what the structure of all this Cleo practice, which is a separate folder in a separate subfolder in your, so we're redoing all these cases, and these names will not appear in the final exam, okay? The name will not appear. You will have to figure it out. So that's why you need to know the facts of the major cases as well. So you will do you have to do two types of study, which is, one is that you do the Cleo practice, which is showing you how the exam questions will come. So there will be 3 questions in the exam in this format, okay? Name of the case will not be mentioned, but there will be a factual pattern, some kind of fact pattern given here, like let's look at our next case. This will be some kind of, like this kind of story will come. Mr. Murphy owned a timber plantation, etc., etc., and he formed a car, and then he bought some insurance. All this fact will come, and you have to figure out that this is based on the fact pattern of this case, Macora versus Northern Assurance. So there'll be 3 cases like this. And so here you have a folder for you. One of the folders is Cleo Practice, which is giving you all these cases, which you can read through, you should read through and see how to answer these questions, okay? So this folder is giving you the real life example of how to answer this type of question, okay? And so then you have, so these are some of the things that you have to study. And then you also have to study, if we go back, you also have to study, so just to give you a quick study guide as well, you also have to study, so don't miss this part, in your lecture notes by topic, right? So for each topic, so we got different topics for lecture notes, and the most important topics are contracts and torts, because you will get 2 compulsory questions, one on contracts, one on torts in section A. So those 2 you have to answer, and those are both going to be in the Cleo format. Okay, so there will be like a case, like Lily went to the supermarket and so on and so forth, like that. So this kind of story will be there. So these are the 2 important topics. Then this is also important, and this is also important. And so these are the ones where I have separate folders. These are the most important topics. But of course, you have some other topics also in your syllabus, so you should study them as well. And so what you have to do is, let's look at BizOrg. No, let's look. Yeah, we have many Cleos. So let's look at this, okay? So under the lecture notes, also you have to do, here we do the direct Cleo analysis of the famous cases. So the cases that are discussed here are mentioned in your this file, okay? So I see a lot of questions coming from, like, how do we study, what should we study? There seems to be a lot of confusion about how to study and all that. But I have already mentioned this to you many times, that this from topic 1 now, there's only these 2 elements, so please read the instructions here. But these things were already clarified many times in the class. What are the important cases, right? So there are some, because I have voice-based dictation on all the time, so all kinds of stuff keeps coming into the text sometimes. Okay, so these are all the mentions, right? So you have to follow all these cases, right? So these are also, you should be familiar with all these case facts, okay? So there's a lot of material to study. So if the complaint is that there's a lot of material to study, we can't help that. You're going to get a double degree. Most of you are going to get a double degree. You have to do some work for it. You can't just take it easy and get a double degree, okay? So if you're getting a degree, you need to put in some effort. But there should not be any confusion about what has to be studied, okay? Then I also got some complaints about the single degree students are not clear or whatever. I don't even know what the exact complaint is. But nobody came to me from the single degree program and said that there is some problem, right? You see that after class, some students are coming and asking questions, but nobody came from me saying that we have some problem. Then I heard that they have complained that there is some kind of problem. So if you have a problem, you have to come to me first. Then I can fix it directly, okay? If I don't fix it, then you can go back and tell other people. So anyway, so this should be very clear to you. What are the cases that are important, okay? And these are highlighted like this because the red ones are the ones where the corporate veil is not lifted, and the blue ones are the ones where the corporate veil is lifted. So there is a kind of a pattern type in both the two sets of cases. Right now, so here there is another place where you go by topic, the important topics, and then also read the Cleo analysis of all these cases. So that will give you a very good understanding of these cases, and these are all very important cases. And if you're going to be accountants, you need to have a very good grasp of law. Okay, there's no getting around it. Okay, so therefore, if you can master these cases and the learning from these cases, it will really help you further down the road in your career as well. All right, so these are all the cases. Okay, there's only one case here which is not in your syllabus. I'll just point it out, but I had initially wanted to teach it, so we don't have the time to teach it now. Maybe I can move it away or something. Maybe I'll just, to avoid confusion, I'll just move it away. So this Hadley versus Baxendale, which is a very famous case, but I'll move it away because I don't want to create confusion. Okay. So what I will do is I'll just move it to my folder so that there is no confusion, because this deals with damages for breach of contract. It's a very famous case, but since we don't have it in the syllabus, we didn't have time to cover it. So let me just go back to this and let me just put it in my folder here so that this is the thing I remembered. So I don't want to create confusion. I thought initially I would leave it in there for you to study because you can learn about that famous case as well. But I think it's better that we remove it, and I'll just put it here. Just move it here. Okay, just move it here. Let me. Yeah, so this will not create any confusion because many people are not paying attention fully in the class. Maybe they study at the last minute and they'll get confused. Okay, so all right, so this is how you study. Okay, so I'm just giving you a quick refresher on how you should prepare yourself. Now there should be no doubt. So 3 questions are going to be in this format from 3 different topics. So 1 question each is already from torts and contracts in the Cleo format, and there's 1 more question in the Cleo format in section B. So I can't tell you which one it is, but it will be out of these other important topics. 1 out of the other important topics. Okay, so it'll be either from this one or this one or this one. So the 3 topics which are left for section B, because the Cleo question will be on the important topic. So there'll be 1 more question, 1 out of 1, 2, and 3 out of these 3. Okay, so the best bet is to study all these topics, the important topics, if you study in a very thorough manner and comprehensive manner, such that you can answer any question on those topics. And the topics are, again, as I told you, please use this file. So when you're studying this topic, what do I need to study? That's always a question the students ask. That's why I created this file for you. That is, what do you need to be? This is your checklist. Like when I go to the supermarket, I have a checklist. I have to buy sugar, I have to buy honey, I have to buy cooking oil, and I buy it and I check it off, right? So this is your checklist. If you're clear about all these concepts, then you know that you have done the topic properly. Is that clear? Okay. Right, so with some general instructions like that, and also please remember in the exam, you have to write a reasonable amount of material, and it has to be sensible material. Please do not write like, these are all 25 mark questions, okay? There are 4 questions of 25 marks. So please don't write like 3 lines for a 25. I see some papers sometimes like that. The person has written 3 lines for a 25 mark question. So how can I pass that person, right? So you have to put in some effort from your side. So that's the situation. So let's go on to the next one. Practice question for this situation. Let me see if I can do some line spacing. The lines are too far apart actually. There's too much line spacing. What happened here? Oh, this one is very... Can I do something about the line spacing? Yeah, I just want to make it 1. Yeah, it's a little bit better. All right, okay, so let's look at this case now. So you see this guy owns a timber plantation. So what he does is he forms a company. He had initially he owned this in his own name. He forms a company, transfers this timber plantation to his company, okay? And then what is not mentioned here is probably that owned a large, and he decided to incorporate his business. He had, okay, so important fact is not mentioned here, which is that so we should say that we should say that he sold the so important thing what is happening is kind of like what Mr. Solomon did, very similar to the facts in the Solomon case, where he had this shoemaking business. He formed a company. He was doing it as a sole proprietor. He formed a company and then he sold his business to the company, right? So this is how he got paid basically for his business. So he forms a company, then he sold the timber plantation to his company, to Forest Giants, okay? So we can call them FG, maybe. We can just call them, okay? He sold the timber plantation to FG. And after that, okay, so this is important. These facts, the sequence is important. So you first form the company, and then you sell the timber business to the company. And what is the consideration? So remember, there's a contract law element also that you can revise in this case, that in every such case, like the case of Solomon and the case of Makora, which is that when you form the company and then you sell your timber plantation, which you own personally, you sell that timber plantation to the company. So your consideration, the consideration flowing from you is the timber plantation that you part with and give it to the company that you just formed, FG. And what does FG give to you? Because in order for the contract to be enforceable, you have to have consideration from both sides, right? So what is the consideration from FG's side? Well, they give you all these shares, right? So they give you like this, basically this amount, okay? So they give this amount, so the company takes a loan from this person and issues debentures. So very much like the financing structure in the Solomon case. So the proprietor sells his business to the company. The company pays him back by giving him a lot of shares, okay? The only shareholder in the company. So holding all 50,000 fully paid up $1 shares. So $50,000 worth of shares. And he has also taken, so you can say the company is worth about 300,000. So he sells the company for 300,000. How does he get paid? He doesn't get any cash. He gets 50,000 worth of shares, and he gets the 250,000 worth of debentures. Okay, so you can assume that he gets debentures, or in the case of the U.S. kind of company, so we can call it bonds. Okay, so he buys the company's bonds for 250,000. And that's how the value of the company is being compensated for. This is the consideration that he is getting from the company's side, which is to a total of 300,000, right? He gets a bond for 300,000. Okay, so we don't spend too much time on this because the case is not about the financing structure, but it's useful to actually look at the financing structure as well, because it helps you to revive these concepts which we saw in the Solomon case, right? Because you're all new to these concepts. That's why I'm telling you that. That's why I keep telling you that when you're studying not just accounting, but accounting, law, finance, economics, all put together. Okay, because this is actually finance. Now what we are discussing is finance. How is the deal financed? And if this is financed for the total value of the transaction is 300,000, and he gets paid with no cash. He gets paid in shares and bonds. Okay, so he gets bonds for basically, I'll just write here, bonds issued to Sean Murphy. Let's call him SM for short. Okay, let's call him SM for short. All right, so SM gets bonds for 250,000. So what does SM get? What is the consideration? And then once again we can jump straight from finance to contract law once again. What is the consideration flowing from the company FG to SM? And that consideration is value of shares worth $550,000 and a bond worth $250,000 of face value, which means the company agrees to pay. We don't know about the tenor of the bond. Maybe it's a 10-year note or something like that. So it's a 10-year bond, let's say, that after 10 years, the company will pay back $250,000 worth of principal, and Mr. SM is holding the bonds, all right? So that's how he gets paid. So you can see all the interactions between the different subjects: law, finance, accounting, everything. Right, now what happens after the company is incorporated? Mr. Murphy sells so basically he is incorporated and then he sells the timber plantation. That's the consideration from his side. And then what happens after this transaction is completed, okay? And after selling the timber plantation, okay, and after that, okay, so and then it is very clear. Then means after that. So what is the critical event that is happening here? Remember, a company is a separate legal entity, right? So what is happening here is that once you form the company and you get the registration certificate for the company, that is considered to be basically conclusive proof of the fact that the company is now a separate legal entity, and generally it will be very hard to prove that there was some fraud in the formation of the company, etc. So therefore now the company is a separate legal entity. That's why it can enter into contracts. So please remember that as well. Why is the company able to buy the business from Mr. SM? Because the company is a separate legal entity. So remember, buying the business from SM is a contract. Do you understand? It's a contract. So why is the company able to enter into the contract to buy the timber plantation from SM? Because the company is now a separate legal entity, and one of the rights of a person with an entity with legal personality is, what can it do? Remember these things, which is it can buy and hold and dispose of property, and it can enter into contracts in general, and it can sue and be sued in its own name, etc. It has perpetual succession and all that, right? So therefore, because it has one of the rights it has is to enter into contracts, it enters into a contract to buy the timber plantation from SM. And these are the two elements of the consideration. Again, now we go back to contract law. What is the consideration? That is, this guy gives the timber plantation, and FG gives the $50,000 plus the $250,000 bond. So total value of the business is $300,000. Is this clear? Now what happens? He sells the timber so he has already sold the timber plantation to the business. So now what happens? Because the company is a separate legal entity, now the timber plantation becomes the property of the company. Is this clear? The timber plantation is now the property of the company. Yes? Everyone is clear about that? Once you sell it to the company and you get your money, remember this guy gets the money, right? He gets the money. So when I go to the McDonald's and I pay 9 yuan for my coffee, once I pay the money and they give me, once I pay the money and they are now obliged to give me the coffee, right? So once I get the coffee, now the coffee is my property. That particular cup of coffee no longer belongs to the McDonald's. Is this clear? Because I'm a separate legal person and McDonald's is a separate legal person. So once they've taken my money, the transaction is done, then they can't come and take the coffee from me, because that coffee now is my property. Is this clear? Okay? So once you do a transaction between two separate legal entities, the transaction is finalized. So now the property has changed hands, right? So FG is now the owner of the timber plantation. But what does SM do? He takes out a fire insurance policy on the timber, okay, in his own name. So remember, when you buy any kind of insurance policy, there is a term in insurance law. Again, this you can learn about these things because it helps you to learn about insurance, which is a very important sector. You might end up working as an accountant in an insurance company, right? So you should understand the insurance business. So there is something called, he personally took out a fire insurance policy. That means he is the proposer. So I'm just writing it here. Okay, so who is the proposer? SM is the proposer. Okay, in the sense we call this person a proposer. That is a person who wants to buy the insurance. So he is going to pay the insurance premium, and then the insurance company will issue a policy in his name. All right. So anyway, so this is the situation. He buys a policy in his own name. He's the proposer in a fire insurance policy on the stored timber, and the policy is worth 100,000. Right. So value of the policy is 100,000, which means that if anything happens, if there is any fire damage to the timber, right, then Mr. SM should be able to get a payout of 100,000. This is clear? All right. So that's the value of the policy. So now what happens is that after this happens, all these transactions are done. The fire destroys all the timber on the plantation. Okay. So this should be on the plantation, not in the plantation. Okay, so now, so what he does is then this guy says, because he has the insurance policy, so he goes to the company and says, you can call them NFI. He goes to NFI and says, okay, so he goes to NFI and says, now please pay me 100,000 because you see I had this policy, I bought this policy, and then the fire came and destroyed the timber. So now I should get 100,000, right? Now, what is the insurer doing now? Where is the conflict? Why is there a case? Because the company does, the insurance NFI says that, no, we are not going to pay you because you don't have, right? You don't have, basically, you don't have any insurable interest in the company's property. This timber belongs to the company, so your policy is void because you don't have any insurance, you don't have any insurable interest in the timber, and that's why you cannot get a payout on this policy. Remember we discussed this earlier, right, in the class when we were discussing the Makara case, that in insurance there is another concept, very important concept called insurable interest, right, which is that in order to have a valid insurance policy on any kind of property, there must be, the proposer must have insurable interest in the subject matter of insurance. What is the subject matter of insurance in this case? Is the timber, right? Because what is the logic here? That if, for instance, if I am allowed to buy a fire insurance policy on Edmund's house, what is the problem here? If the law allows me to do that, that maybe Edmund and I have some kind of fight, and I don't like him. So then what I might do is I might buy a fire insurance policy on his house, and then I might go and burn down his house because I don't lose anything. So I will get a double benefit because I can burn down his house, and then I can get a payment on the insurance policy. Do you understand that? It creates a bad incentive. So that's why in the law we don't allow people to take out insurance on things where they don't have an insurable interest. So I can take out a fire insurance on my laptop because the laptop belongs to me. If there is any fire damage to the laptop, then I am going to be the loser. So you have to show that you will benefit from protecting this property, and you will lose if the property is damaged. Okay, so in the case of the laptop, I can prove that I have insurable interest, right? Because the laptop belongs to me. Do you understand? Yeah? So there's another important thing to understand about insurance, which is so you're learning about other industries as well. Because as I told you, you have to keep on studying everything. You have to keep on observing, following business news regularly, right? You must make, this is not in your syllabus, but this is important for your development, right? So therefore, you have to learn about other industries. So you're learning a little bit about insurance, about the insurance industry over here. So this important thing called insurable interest. Now, why does Mr. SM not have an insurable interest in the timber? Why? Because, remember, he has sold the timber to the company. And the company has paid him money for it. They didn't pay him any cash, but they gave him shares and they gave him bonds, right? So they gave him those shares and bonds for free because that's basically the consideration flowing from the company in that transaction. And so once you have done that transaction, now the timber plantation belongs to the company, including everything on it. That is the timber. So the timber also belongs to the company. which is a separate legal entity. So the inference or the conclusion from the fact that the company is a separate legal entity is, remember we saw this in the Solomon case also, that the assets, now you understand assets and liabilities, right? So I've shown you assets and liabilities on the balance sheet. When you draw up a balance sheet of any company, the assets and liabilities are the assets and liabilities of the, so if you go here, we have that somewhere actually. So if you go here and you quickly get this, let's call up the Alibaba balance sheet, right? You can go, this website is available in China, so you can see, you can check all this. So we go to statements, right? So we look at all these things. So we got an income statement. Let's look at the balance sheet, okay? Yeah, so this is the balance sheet. Now, balance sheet, remember, is, I don't know if I taught you about stock concepts and flow concepts. Did I teach you about that? Stock concepts and flow concepts. Okay, so I didn't have a time to teach you about all that, but I taught the finance students about this. But anyway, so stock concepts, and it's very easy for you to remember this actually as an accounting student. I'll try to put this in your notes later, but at least this is recorded. You can play it back and learn it, which is, these are things you should know, stock concepts and flow concepts. So the balance sheet actually shows you all the things which are stock concepts or stock quantities. Stock and flow, the terms are actually stock and flow. We can put it, I don't know where I would put it into, maybe we can put it into our BizOrg lecture notes, right? I don't want to slow it down here actually, but I'll just put it here, casual discussion, okay? So, stock versus flow quantities, okay? And I'll put some additional information as well. Stock versus flow quantity. What is the stock quantity? Everything on the balance sheet, remember, balance sheet is always as at 31st March. Okay, as at 31st March, which means the balance sheet is a snapshot at a point of time. Is this clear? What is the important difference between the balance sheet and the income statement? The balance sheet is always 331. That is, as at 31st March, I take a picture of the company's assets and liabilities, and that's what you have. Is this clear? And what is the difference in the income statement? The income statement is a period, okay? Period ending, so 1 year ending 31st March, okay? So income statement is actually for a whole period, and the balance sheet is for the end of the period snapshot. Do you understand? So income statement is a flow concept because it talks about the movement over a period of some variable, okay? And this one is talking about a point of time. I take a picture of everybody in this class, okay? At one point of time, that's a stock quantity. If I take a picture, let's say, if I take anybody's picture, if I take Ian's picture every 5 minutes, wherever Ian is going the whole day, that's becoming like a flow concept because I'm tracking Ian over a period of time, okay? So anything that is happening, so that's a stock versus flow. And I will also teach you something very quickly, actually. So this is, we are moving between topics, so it's a little bit confusing for you maybe, but I think it's also important to learn how to study in this manner, is to connect all the different subjects, okay? So since we have already finished our syllabus, I'm taking a little bit of time to teach you like this. And the other concept is, I write it faster. These two concepts are very closely related. Stock versus flow. Now you understand stock versus flow, very easy. Everything on an income statement is a flow. Is this clear? Everything on a balance sheet is a stock. That itself gives you the clue straight away. Okay, balance sheet is always one. Now what is cross-sectional versus time series? The reason I wrote it like this is because cross-sectional connects to this and flow connects to time series. Okay, what is time series data? Let's go back to the chart. Okay, this is Alibaba share price. Okay, so let's look at the share price. This is from, you can't really see it, but I think it's from April of this year. Okay, movement from April of this year to December. Okay, this is called time series data. So we are plotting the highs and lows of Alibaba. This is ADR. This is not the actual Chinese yuan priced share. This is the US dollar based American depository receipt, something you can also learn about as you learn about capital markets. So these are non-American companies who have listed their shares in the US. They are listed as ADR, means American depository receipts. So this is the Alibaba ADR on the New York Stock Exchange. Okay, this is one of the used to be the biggest IPO ever in the world, $26 billion, but now it's been exceeded by I forget the name. It was exceeded by Saudi Aramco, which came in at I think $29 billion. So anyway, movement of Alibaba share price over period of time is time series data. It's called time series data. Is this clear? Now you see why time series data is similar to flow. Can you see that? Yeah, it's very similar to flow. Now let me show you some cross-sectional data. On this same thing, we can look at maps. It's a very useful site actually. You can use this for a lot of analysis, and you can analyze all the Chinese companies, listed on US exchanges. I think there are about 250. There are about 250 Chinese companies listed on US exchanges, which you can find through the stock screener here. Okay, now what is this? This is an example of cross-sectional data. Cross-section, I don't know if you remember from biology class that you would cut a bamboo. When you cut a bamboo like this, that's like and you look at this thin slice of bamboo through the microscope, okay? That's like a cross-sectional data, okay? That used to be called, it is still called cross-sectional data, if you remember it from your biology class. So this is cross-sectional data. Why? Because it shows you, if you look at technology, it shows you, look at this, all the software, so there are different sectors and all that for the industry, right? So it's not just that technology is a broad category, then within technology we're looking at software, within that we're looking at infrastructure software. So which are all the companies that sell infrastructure software? These are all the companies. These are the Swift codes, just these are the tickers. These are called the tickers. Like just like Alibaba, you don't write Alibaba, you write Baba. B-A-B-A, okay? So here, MSFT is for Microsoft, Oracle, this is Palantir, and some of the others I don't even know. VeriSign is there, you can see, network appliances. So, but what we are interested in right now is that these are all the different companies. So Microsoft, Oracle, Palantir. So why is this cross-sectional data? Because it's a snapshot at a point of time. This is last night's New York close share price for all these companies. So I took a snapshot at a point of time. So this is called cross-sectional data. Do you understand? Yeah? That's why I have written it like this. Why? Because it is matching with stock. Okay? So stock and cross-sectional are the same. So all you need to remember is basically this kind of picture and the Alibaba chart I showed you earlier. And then you need to remember the balance sheet versus the income statement. Right? So the balance sheet is stock, and income statement is flow. I can write it here maybe. I'll just call it P&L account. That's your clue. Balance sheet and P&L account, okay? That's your clue. Okay, so this is actually a diversion. This is not in our syllabus, but I think it's important because we have finished our syllabus, so I think it's important to do this kind of exercise in the class because it teaches you how to analyze subjects, how to look at everything from a multidisciplinary perspective. And the reason I did it deliberately, even though you might get confused in the middle of the Makara case, we're jumping off to all this, because you need to get comfortable with this kind of approach to learning, because the real world is going to be like this. Nobody is going to give you a defined problem that it's not going to be so neat. When you get out into the real world, everything is a complete mess, okay? So you have to figure it out yourself with multidisciplinary analysis. So that's why I did this, okay? There is a risk involved that you might get confused, but I think you need to get used to learning in this manner, okay? Right, so what's happening? So what did we learn? That basically, why did I go into all this? Because when I saw the balance sheet, I wanted to teach you about stock and flow, because I think it's so important actually, stock and flow quantities, so important to know. Okay, go back to the balance sheet. Okay, so we got a 20-minute break now. All right, let's restart the class. So we were at this stage here, right? So what did we do? So the reason we went, I was just going back to the balance sheet, and that's when we were interrupted because the class ended. Now let's go back to the balance sheet. So what is the lesson of this case? So always try to connect all these. No talking, please, here. No talking. Once the class starts, no talking at all, okay? So what were we trying to say? When I went into the balance sheet, I wanted to discuss the stock and flow quantity, so it's an important learning, so that's fine. We finished that detour. Now we come back to the case. Now SM has bought the insurance policy in his own name, but the property actually belongs to the company. So what was the lesson that we learned what is the general implication of the company being a separate? So what I wanted to ask you was basically when we stopped, that this balance sheet that you see here, now we are looking again, this is the period, so total revenue, there's an income statement. We go back to the balance sheet. This balance sheet, so is this balance sheet the balance sheet of Jack Ma, or is it the balance sheet of the company? Is this the balance sheet of the company, or is it balance sheet of the company, correct? So this is important to remember. What is the meaning of separate legal personality of a corporation? It means this balance sheet that we are drawing up, it is not the balance sheet of Jack Ma. It is the balance sheet of Alibaba Group Holding, the company, okay? So it is the balance sheet of the company. And what is the lesson from the separate legal entity concept? That the assets and liabilities of the company are not the assets and liabilities of the shareholders. Clear? And so what is the lesson that we learned in the Solomon case? In the Solomon case, what was decided was that so it's coming from that general principle that the asset, because of the separate legal personality concept, and because you're conducting the business in the name of the company, right? So therefore, which is a separate legal entity, the assets and liabilities of the company are not the assets and liabilities of the shareholders, right? And so from that general principle, in the Solomon case, we got a specific ruling that the liabilities of the company are not the liabilities of the shareholders, because assets and liabilities are not belonging to the shareholders, the company's assets and liabilities. So therefore, in the Solomon case specifically, what did they want to do? They wanted to make the liabilities of the company equal to the liability of the shareholder, which is Mr. Solomon, right? And the court did not allow that. So in the Solomon case, we said that the liabilities of the shareholders of the company are not the liabilities of the shareholder, as a sub-rule. Now in this case, what is the insurance company trying to say? The insurance company is invoking the general principle that because of the business is conducted in the name of a separate legal entity, which is the corporation, and which can buy, hold, and dispose of assets as one of its rights as a legal entity. Therefore, once the timber is sold, the estate is sold to the corporation, it becomes the property of the corporation. And what is the general principle? Assets and liabilities of the corporation are not the assets and liabilities of the shareholders. So specifically in this case, the insurance company is saying that you have no insurable interest because the assets of the corporation are not the assets of the shareholder. Mr. SM is the major shareholder, but because the assets of the corporation are not the assets of the shareholder, therefore the shareholder did not have insurable interest in the timber that he was insuring. Is this clear? Have you understood this principle? Right? Because remember, what is the example I gave you? I don't have insurable interest in Edmund's house. So I cannot buy fire insurance for Edmund's house because it's not my property. Is this clear? But I can buy fire insurance for my laptop because it's my property. So if the assets of the company do not belong to, if the assets of the company are not the assets of the shareholder, then Mr. SM cannot buy he does not have insurable interest in the timber which belongs to the corporation. Is this clear? So you're seeing two different aspects. So when you look at these cases, you should also distinguish them in this particular way, that following from the general principle that the assets and liabilities of the company and the shareholder are different. In the Solomon case, we use that particular sub-rule that the liabilities of the corporation are not the liabilities of the shareholder. In this case, we are now focusing on the asset side. We are saying that the assets of the corporation are not the assets of the shareholder. Is this clear? You see how we are looking at two different sides of the balance sheet in two different cases? So basically, in the discussion of the question itself, I have given you the whole answer, so we'll move a little bit quickly through this because we have to go through many other cases. So, but anyway, you already know the answer here. But this is how, as the question, we were discussing this question during the break. What will the form of the question be? The exam questions will be like this kind of story, right? This kind of story will be, that's why I've written it in this format. So this entire Cleo practice folder is all the practice questions. It gives you exactly how the exam question will come, and it shows you how you should answer it. Okay. So only difference is in the exam you will say that instead of asking like this, you will be asked like, you are the judge. Please use you are the judge in this case, and please use the Cleo framework to analyze this case and give a decision. Okay, so that's the only difference, but it's the same kind of format, right? Are you following? Okay, so the question in the exam is going to be something like this. Okay, you, instead of them being his legal advisor, you will become the judge in the case, and you have to use the Cleo framework, and you have to analyze this case. The question will be like this. All these facts will be given. So, as I was saying, just like by now I recognize some of the students, so you should be able to recognize the key facts of the major cases, right? So once you read something like this, you should be immediately able to recognize that, oh, the facts of this question are matching the facts of Macora versus Northern Assurance. You understand? Which is a famous case in company law. So then you have to recall those facts and the principle of that case, the ratio decidendi, and you have to answer in this format. Okay? So I've given you so many Cleo practice examples because you can read through these, practice these, and you can become familiar with how to answer it in the exam. And please try to maintain the structure, okay? Because if you can at least maintain a structure, even if some of your answers are a little bit wrong on this, you get some marks for getting the structure correct, okay? At least we want to make sure that we understand the structure and write the right things in the right sections. Like don't write the ratio decidendi in the claim section, right? So at least if you understand the structure, you can get some marks for that. So that's why I've given you all these practice questions. So and then this is how this is your answer format, okay? This is how. So I'm not going through all of these things. I'm not reading out everything because this is something you can read on your own because I need to cover so many cases. So, but this is all available to you, so you can read it yourself. Okay, these are the areas of law. What are the things you have to mention? This is something I added into the framework. This is not there in the case, in the textbook, because this is very important in every case. When you remember major cases, there are three things you need to remember. So I've given you so many important cases to remember, right? And we had all these cases, like you can see here. In the case of torts, we have these three. Now we are looking at the business organization cases, right? So these are the important cases that you need to be aware of the facts. So for every case, you need to be aware of three important things. What are the distinguishing facts of the case, right? Like just how I remember the cases. When I see Milico, I can see that, okay, I know this this student is called Milico. When I see Edmund, I know that, okay, this is called Edmund. So I can distinguish between the two, right? So similarly, you should be able to read these cases and distinguish between the facts of the case. What are the facts of the case? So the three things. One is facts. The second is the legal issues in the case. What were the legal issues and what was the dispute about? The legal issues in every case are, what is the central dispute about? Okay? So in this particular case, the dispute is about whether Mr. SM has a insurable interest in the timber, okay, for which he bought a policy. Okay? So, and then there's a secondary issue there, but this is the main issue here in this particular case, right? So then the second point you need to remember, what are the key legal issues in the case? And directly connected to the key legal issues are, right at the end, you'll find the ratio decidendi of the case, which you saw here. This is right, and we can go to the end of this. So right at the end in the outcome section, you have the ratio decidendi. So these are two different cases, but The legal issues are directly connected to the ratio decidendi because the legal issues tell you about what is the central conflict, what is the debate about, okay? Why is the case being brought to the court, and the ratio decidendi shows you the exact legal reasoning that the court goes through to resolve that legal issue in the case, right? So at the beginning of the case, you have those legal issues because the case has not been decided yet. Once the case is decided, the ratio decidendi of the case is clear. So usually the judge will say that most of the time, basically, almost every time. Sometimes they may refer the case back and all that, but we don't have to worry about that. The judge will decide the case. So the judge will say, okay, this person is right and this person is wrong, right? So how does the judge decide that? What is the reasoning? What is the logic, right? When you look at all these AI models, they talk about the reasoning behind the AI models. So what is the reasoning that the judge goes through to arrive at the decision in the case? That's the ratio decidendi, because that becomes the holding of that case, and that principle will be applied in future cases, which is what you're going to do, right? So if you get a question on Donahue versus Stevenson in the exam, what are you doing? You're taking the fact pattern of Donahue versus Stevenson, connecting it to the famous case, and using the famous case as a precedent, and applying that logic, and helping to decide the case, right? This is exactly how a court would decide the case. Right, so as I mentioned, we were talking about this case. So 3 important factors in a case. The case fact, when you look at the famous cases, when you're studying all these famous cases, and right now we're on company law, 3 important facts, legal issues, and ratio decidendi. For all the major cases, you should be clear about all these. All right? This is clear? Okay? So, and try not to memorize. Try to understand the logic, because if you try to memorize, you'll just forget. It's too difficult. Too many cases, and you'll write maybe instead of A, you'll end up writing B or something like that. Okay? So don't do that. Try to understand it logically. If you can't understand it logically, please post questions. Have you seen that so many good questions have come during this semester? Very good questions from the students, because those students are trying to understand it logically. When you try to understand it logically, that's when you will get questions, right? Your questions will arise in your mind. And that's when you have to ask me so that I can clarify for you. Is this clear? Okay? Right. So now we are coming to the law section. Okay? Now, as you know, in the case of insurance, we have... Now, I'm not going to spend too much time on this matter because we already discussed all these principles of insurance law in the previous sessions when we covered Macora versus Northern Insurance directly, right? We covered... So when you come to the law section, you can clearly say that this particular case this is the most important, the key precedent there to mention is Macora versus Northern. You don't have to mention all this detailed AC 619 and all that. If you can remember all this, that's great, but you don't have to. Really just have to remember the name of the case. That's the most important thing. And year and all, if you remember it, that's great, but you don't have to remember. Main thing is you don't even have to remember the year of the case. And main thing is to remember the case, the actual full name of the case, and the facts of the case, the legal issues, and the ratio decidendi. These are the real key learnings from the case, from all these important cases. So, what do you talk about in the law section? Okay, what is that insurance law? We have this requirement. I already discussed it earlier, so I'm not going to mention it again because we don't have time. Okay. On statutory basis, you don't really have to mention it. If you can mention it, that's great, but it's not really required because the focus in this module is really on common law. That is understanding, pure traditional common law. That is the judge-made law. How we can decide cases, modern cases. How we can decide modern cases based on the precedents set by famous cases that came earlier with the same fact pattern, right? That is what we are learning in this case, to understand how the pure common law would work. Of course, in the real world, you have statute law, but since we have only one module and very little time, so I'm deliberately de-emphasizing statute law by and large, except for, you got some questions in your midterm on the duties of directors and all, which are now coming from statute law, actually. So there is an intermingling, but we are ignoring by and large statute law in this module because we want to focus on the pure common law and how it works. Okay, so that's the concept of insurable interest. Then separate legal personality. Okay, what we said, and the thing here, I mentioned very important things here to connect it to your accounting, that what is the meaning of this, because the assets, in this case, they've only talked about assets. Actually, it's also liabilities, right? Companies' assets and liabilities, okay? But in this case, why is assets highlighted? Because in this case, we are focusing on the asset side. In the Solomon case, we focused on the liability side, right? Right. And so again, you have to connect this also because why are they the property of the company? Because one of the things a legal person, entity with legal personality can do, a legal person can do is buy, hold, and dispose of property. Okay, that's why it is the property. So you should remember that property also, that particular characteristic also, right? And so then you cite the main important thing is you should be able to identify that this fact pattern matches the fact pattern of Makara versus Northern Insurance, cite the CRE precedent, and just briefly talk about the facts and the holding in that particular case. So the holding is the American term, and ratio decidendi is more universally used, but you can use either term, but it's better to use ratio decidendi because you are learning for the first time. And all these technical terms, whenever you're using the legal terms, please put it in capitals, all caps, okay? Put it in all capitals means write in block capitals. So this is it, so shareholder interest, okay? So this is basically the other point that what the judge will rule in this case, and you have seen this already in the Makara discussion, that the fact that the shareholder, if the timber is burnt and the company's assets are destroyed, eventually the shareholder will suffer a loss, right? But that interest of Mr. Makara as an SM in this case, as a shareholder and a bondholder in the company is too remote, and it does not really create insurable interest for the shareholder and bondholder. Okay, even though he's holding all the shares and he's holding on the bonds of the company, but he's still not. He's the main financier of the company and the only financier, but it still does not surmount the barrier of the separate legal personality of the corporation. So in this case, again, so what happens, as you can see, the facts are identical to Makara in the evaluation say. So here I'm not going to repeat everything. You can read all this stuff on your own. Okay. So he has $50,000 worth of shares. He has $250,000 worth of bonds. Okay. He's a bondholder. Okay. In this case, he's just so this basically his general interest in the company's solvency is too remote to give him an insurable interest in the specific timber. So basically the fact that he's a shareholder and a bondholder in the company. So you see how important the corporate veil is. In this case, remember we use the word corporate veil, V-E-I-L, which is a separation between the shareholder and the company. Okay? So you see how important that veil is, because even though you're the major shareholder, you're the only shareholder and the only bondholder, because you created a separate company and you transferred the timber to the company, now the timber becomes the property of the company, and you see how important the veil is. They will still not lift the veil even though you are the only shareholder and bondholder in the company. Is this clear? So that's how important this principle is. Okay, so you can see the outcome here, obviously, because he has no insurable interest, period. That's the end of the story. Once you determine that even though you're the major shareholder, and you're the only shareholder and the only bondholder, you finance the entire company, but still you created a company and then you transferred the timber business to the company and you got shares and bonds in return, right? So now the timber business, the timber belongs to the company, and the fact that you are the major financier, the only financier of the company, does not allow you to still lift the corporate veil and treat the assets of the corporation as the assets of the shareholder. You can't do that. So no insurable interest, therefore your insurance policy is void. You can't claim on the insurance policy. Is this clear? This topic clear? Okay, let's move on to a few other points. So this is your second Cleo practice. Now this is another one based on Lee versus Lee's air forming, the famous case. Okay, which is again your question is going to be like this. So I should not have, ideally I should not have had these names because they are giving you a clue, but I needed to identify the cases myself, so I've kept the names. But in this case you should practice in a serious way as if you don't know, and then read this and try to see if you can remember that this comes from, the facts of this case are matching the Lee versus Lee's air forming. Okay, so what is happening? Okay, we can remove this actually, or maybe we can put it here. Right, so we can see, maybe we can make it like the line spacing. Yeah, a little bit clear, a bit more closely bunched together. Okay, so you can see what's happening. Forms a company. He wants to do crop dusting, and so agricultural service actually. So that's why it's called air farming. That famous case is called air farming, Lee's air farming. So he holds 99. So this case actually comes from New Zealand. So as you can see now, different times in different countries, there are different requirements for how many people need to be there to form a company. Like if you remember the Solomon case at that time in England, the requirement was that you needed to have at least 7 shareholders. So that's why he gave the shares, he held most of the shares himself, but he gave 1 share each to his wife and his 5 children, right? So therefore they had a total of 7 shareholders. To make those, come to that total of 7, he gave the shares to his wife and 5 children. So total of 7 plus Mr. Solomon, total of 7. At this time, when this case happens in New Zealand, at that time, the requirement under New Zealand company law was 2 shareholders. You need to have a minimum 2 shareholders to form a company. So what this guy does is he holds 99% of the shares in the new company, but he gives 1 to the controller of the company, okay? So because he needs to have 2 shareholders, right? So sorry, not the he has 90%. Another one is given to the company secretary actually, that's not mentioned here, okay? He is the governing director and the company controller, so in the sense he controls the company, okay? Controller is actually a specific position, but this can be rephrased a little bit, okay? It should be really as the person who controls the company. He's the sole managing director or governing director, okay? Now what happens, now remember he forms the company, he holds 99% of the shares, but he also appoints himself as the company's chief pilot. So what this company is going to do is called, they're going to spray aerial top dressing. So there's some kind of service in agriculture where you take an aeroplane and you go and spray maybe the pesticide and other kind of stuff, treatment over the plant. So if you have a large estate, you take an aeroplane and you go over the trees and you spray something on the trees, all right? So that's the business, right? So now this guy is holding 99% of the shares, but he's also appointed as a chief pilot, okay? So this is what happens. The company registered, gets now what happens that under New Zealand law at that time, there is, and in most countries you'll find this as well. You can find out in China what is the actual law about regarding this topic, regarding this matter, which is that in most countries, whenever you employ people, there will be some kind of employment insurance law, like especially when you're working in areas like construction, things like that. So the construction companies, they will be required by law to take out some kind of employment insurance for their workers, okay, so workplace safety insurance. So any of the workers that gets injured on the construction site or they die during the construction, so that insurance policy must have been bought by the company. They are required by law and to buy this insurance so that if the worker dies, then his family can be paid from the proceeds of that insurance policy. Is this clear? This is a requirement in almost every country, okay? So in this case, in New Zealand also they had this requirement. So therefore the company bought insurance policies for their employees. And so Mr. Carter was the chief pilot. So they bought a general employment insurance policy for their employees. And so Mr. Carter was also covered because we'll just call him CC. We'll call him CC. Okay, Charles Carter is CC, and the company is Skycrop, so SS. So you have SS and CC. Okay, so Mr. Carter, CC, is actually now he's also covered by the insurance policy. Okay, which is for suffered by employees for death and injuries. Okay, now one day he's flying the aircraft and he dies. The aircraft crashes and he dies. So the case is that his widow, okay, Mrs. CC, files a claim against SS, okay, under the statutory insurance policy for employee compensation. So Mrs. CC comes to the company and says, look, my husband died. He was an employee of your company. So under the law, you are supposed to pay me the insurance amount for his death, right? Because he died while working for the company. So now what does the company do? The company has also bought the insurance already. When they formed the company, they also bought the insurance policy from the insurance company, right? From the insurance company, we can say, okay, let's call them IC, insurance company, all right? So you have CC, you have SS, which is the company, and there is IC. So there are three parties here, okay? So you have CC, who is the employee, you have SS, which is the company. So CC is now forming the company, and he's also the chief pilot of the company, is an employee of the company. And then SS, which is the company, buys the insurance, workers' employment insurance, employment insurance policy from the IC, which is the insurance company. So now, after Mrs. Widow files a claim against SkyCorp, that is SS, they obviously have to pay her because they are bound by law to pay her, right? Now, and they're not claiming that CC was not an employee. Then what happens? SS will now go to IC because they have to pay the widow. So now they will go to IC and claim under their insurance policy. They are going to the IC and saying, look, we bought this insurance policy, one of our employees died, and now we have to pay his widow. So now you better pay us your part of it. That is, because we bought the policy from you. If any of our employees dies, you have to pay us, right? So they're asking the other person to pay us, to pay them. SS is asking IC to pay them, but IC is not paying. Okay, IC is not paying SS. Okay, they don't want to pay because they are saying that CC cannot be an employee of the company. So this is a central issue in this case, as you will see. So IC is not willing to pay on the insurance policy, even though they took the premium from SS. Because they're saying that this insurance policy is for employees, and we are not going to pay you here because Mr. CC can't be an employee because he holds 99% of the shares. So if he holds 99% of the shares, how can he be an employee? He's the owner of the company. How can he be an employee? He's the guy who owns the majority of the shares. He's the controller. I mean, he controls everything in the company. And so in this case, we don't accept that he's an employee of the company because he is the company. So in effect, what is happening is, you can see that again, you can in all these cases we are discussing, especially on this topic, you should focus on what is the kind of a claim with respect to the corporate veil, right? So always focus on the corporate veil, which is the separation between the company and the shareholders. So in this case, effectively what is happening, if you want to frame the position of the insurance company in terms of what they want to do with the corporate veil. Should it be kept, should it be maintained, or should it be lifted or pierced? Another thing we say is pierce the veil, right? So if you have body armor and the sword comes and goes through the body armor, then we say the sword pierced the body armor, right? So if you want to either pierce the veil or you want to lift the veil, either way what you're doing is you're destroying the separation between the shareholders and the company, right? That's what it means to lift the veil or pierce the veil. So the insurance company in this case, if you look at it, they want to pierce the veil. They want to lift the veil because they're saying that there is no difference between CC and SS. Because CC owns 99% of the shares, he's the controlling director, everything is done by him. So we don't accept that this is a separate company and he's an employee. He is not he's not separate from the company. He is the company, right? So they're essentially asking the court to lift the veil. So again, this question will be like this. You say you are the judge in this case. The question will say in the exam. So it's slightly different wording from here. I just wanted to get you used to different kinds of wording. And then it will say you are the judge in this case. So please decide this case using the Cleo framework. So now we decide this case. And you can see here various claims. Okay. Again, I'm going a little bit quickly through this because this case is based on these facts are similar to Lee versus Lee's air farming, right? And that case has already been discussed with you earlier in detail when we covered the cases, right? So all of these are famous cases which we have already covered with you. And now I'm giving you the exact exam question and answer format, right? So these are things which you really should study yourself more in detail. Everything is there, okay? So this is the real legal question. Can the main controller and the majority shareholder of a company, can it also be its employee, okay? And does the doctrine of separate legal personality allow an individual to stand in two distinct legal capacities? So this case is also very important because you already saw this principle being established earlier in the Solomon case, etc., and all those cases where a person can be a shareholder and a creditor. Okay. In this case, you see an even more sharper example of this principle, which is that a person can stand in two legal capacities, right? The same person can be a majority shareholder, but he can also be an employee, right? This is allowed under the doctrine of legal personality. I've already given you the answer, but in this legal issues section, you will have to write this part. So please study these notes very carefully, how to answer these questions. The reason I prepared all these documents is because I wanted to give you practice on how to answer these Cleo format questions. So this entire Cleo practice folder is about teaching you how to answer these types of questions. So in this case, these are the two things, and as you will see, the answer will be that here the answer will be yes, okay, and here again, yes, a person can have two distinct legal capacities. He can be the shareholder, and he can be the 99% shareholder, and he can also be the employee. Okay, the only thing you need is a contract of service to make him an employee. And here, when you talk about contract of service, this is actually from the topic of company law or business organization, but we are now connecting again. Please get used to this habit. So not only will we connect between law and finance and economics and accounting, all of these elements, but we will also, within the law, we will also connect. When we are studying company law, we will always connect, if possible. We will connect to contract law, we will connect to employment law, okay, we will connect to torts, etc. So get used to all those connections. The more connections you make, the easier it is to remember things and recall things. Right, so here we are actually going to connect also to employment law. What is it that makes it possible? All you need is that there should be a contract of service. We'll see separate later, okay? So what is the law here? In the law section, we talk about the Solomon case, okay? Any separate legal personality case, you're going to talk about the Solomon case because that is the most important case affirming the corporate veil. Okay, dual capacity and contracts of service. What is the time? It's 10:40 actually. Yeah. Okay. So let's try to finish this one at least. Okay. So you have dual capacity contracts of service, and as you can see here again, that this famous case and this case will be on the question of dual capacity. It is Lee versus Lee's Air Farming, which is the main precedent in this case. Okay, so this is your trick. This is where you have to recognize that when you read the facts given in the question, you have to recognize that, oh, the facts of this case resemble the facts of this famous case we studied called Lee versus Lee's Air Farming. And what does that do? That establishes that the separate legal personality is such a strong principle that as long as you have a contract of service, a person can be a 99% shareholder and he can also be an employee. So you can have dual capacity. Okay. So because why is the company able to enter into a contract of service with Mr. CC? Because the company is a separate legal personality. And remember, once again, use this opportunity to recall what are the key characteristics of a legal person. It can enter into contracts generally, right? So it can enter into contracts of service. Is this clear? That's why it's able to enter into a contract of service with CC and make him its employee. And the separate legal personality allows the dual capacity concept, as we learned in Lee versus Lee's Air Farming. Okay, this is a Privy Council case. Why? Because it came from New Zealand. So the Privy Council handles all these cases from the former colonies of the British Empire, and this case came from New Zealand. So you can see that. So in this case, what we talk about what happened in this case. So yeah. Now here, notice what we are doing here. Now we are connecting back to our topic in employment law, right? So in employment law, there's only one important case, which is ready mix concrete versus Minister of Pensions and National Insurance. So in that case, and in employment law generally, we studied about the difference between contract of service versus contracts of service. Okay? That is, contract of service is for employees and contracts, what did I say? Maybe I made a mistake. So contract of service is for employees and contract for service. So there's only one difference in the words. And contract for service or for services is for independent contractors, right? So I am an employee of Duffy. So I have a contract of service with Duffy, right? Whereas if I call, something happens to my water supply in my house, if I call the master to fix the water supply, the plumber, then for him I have a contract for services. He is not my employee. He's an independent contractor. Is this clear? Okay, so that for contract between me and him to fix my water supply is a contract for services. So to qualify as an employee, the question is, can CC be an employee of SS? Okay, even though he's a 99% 99% shareholder, and the answer is yes, provided there is a contract of service, not a contract for services. Because if it's a contract for service, then he becomes a independent contractor, right? But in this case, we find the court will read the facts and see that in this case, there is a contract of service. There's a proper, or you can write this also by saying that if there is a proper contract of service, we assume that there is a proper contract of service and not a contract for services. So by saying something like that, you demonstrate your knowledge that in order for someone to be an employee, there needs to be a contract of service, not a contract for service. Is this clear? So we can make that assumption. In this case, you can say we can make that assumption. Okay, so you can say directly cite the precedent of Lee versus Lee's Air Farming, and you can say that we assume that there's a proper contract of service and between the company and Mr. Lee, Mr. CC, and therefore between SS and CC. So, and as affirmed in this famous case, Lee versus Lee's Air Forming, then in this case, so all the cases also please mention in all caps. Once you mention the case first time, the full name of the case in all caps, then you can just put a like a bracket, so you don't have to write the case name every time, okay, as held in this case. So in this case, how will you write this? Just write Lee. You can just write it as Lee LAF, okay, no, capital, okay. So once you write the name of this case first time, in full, but first time you write it in full, Lee versus Lee's Air Farming, just put a bracket and say that ideally what you have to do is you have to write it like this, right? This is how you write. The first time you use an abbreviation, just write it like this. Then in the future you can just write LVLAF. You don't have to write the full name, right? So what we can see in the evaluation section, so please go through these direct closely and see how exactly the different sections are written. So this is all meant to give you this practice. By reading all these cases, you get used to how to answer the question in the Cleo format. Now, so as you can see here, then dual capacity evaluation, yes, he's a genuine employee. There is a contract of service. That's what is important, okay? So if the insurance policy covers all employees, okay, during their work, then insurance company cannot refuse payments, that he's all on the ground that he's also the majority shareholder, right? So the legal relationship exists between two distinct legal persons, right? Because the company is a separate legal personality. So once again, in this case, you can see how strong the separate legal personality of the corporation is, how strong that principle is, because it allows you to, not only does it separate the assets and liabilities of the company from the assets and liabilities of the shareholder, but it allows you to even act in dual capacities, okay, and multiple capacities actually. You saw that in the cases of Solomon and in the case of Makora. I don't remember exactly the facts in Makora, but at least the practice question that we gave you based on Makora, you saw that the person was actually the only shareholder and the only bondholder of the company, and still he was not treated as being his assets and liabilities were not the same as that of the corporation. So that's how strong the principle is, okay? So then you got this, and yeah, so outcome, as you can see, that this is okay. In the ratio residently, you say, okay, controlling director, shareholder of a company, he can have a dual capacity because the separate legal personality concept is so strong that it allows for all these things, okay? Right, so that's your second case done. Now we are going to go, so out of these three, I have only analyzed two actually, okay, to give you practice. So we said that the red cases are all cases where the veil is not lifted, and the blue cases are all cases where the veil is lifted. So we have done two out of the three red cases because I didn't think I'd have time to do all the three, and now I'm doing now we'll be doing two of the blue cases. We'll be doing two of the blue cases, which is Guilford Motors and Daimler versus Continental, right? So let's look at those two here. Okay, so let's look at Guilford Motors. So again, this case is on this question. Let's make it a little bit better here. Right, so again, you can see here, this question is coming up here. Okay, now here, again, this case is based on, so the question will come like this, right? Some story will be given to you here, okay? Like this, all these fictitious characters will be named and the story, but then you have to read the story, you have to understand that this story is based on the case facts of the famous case of Guilford Motors versus Horn, right? Which is a case when the corporate veil is actually lifted by the court. So if you look at the facts of the case, you can see we don't need to spend that much time also on this because but we have enough. We have one more block left, so where we can do all this. So you can read the facts of this case. Okay, we got a 5-minute break. We'll resume once we come back. All right, let's restart here. Quiet, please. No more talking. Once the class resumes, no more talking. Okay, so where we were about to start, I was just reviewing the cases that we have to cover. I think that we have covered everything. These are all contract cases, so we have covered those. We have covered the tort case. Then we have, under company law, we have covered Macora and Lee versus Lee's Air Farming. And we are about to start Guilford Motors. And then the last one we have is Daimler. That's fine. So we'll finish a little bit early today because I need to take the attendance because I need to go somewhere during the break. So we won't start the attendance at the end of the class. We'll allow some time for attendance, actually. So we just need to cover a couple of cases. We have about 35 minutes. So we should be okay. More than enough time, actually. So let's look at this case, okay? So here you can see his managing director now. Okay, so this is called a non-compete clause. Now all of these terms are already mentioned in so this case is based, as you will see later, this case is based on the facts of this case are based on Guilford Motors versus Horn, which is a famous company law case where the veil was lifted, right? So in this case, you can see he's a managing director, and we discussed all these terms in while discussing Guilford Motors versus Horn itself, because there is a Cleo file on Guilford Motors itself. You will find that here. If you go back to this one and you go back to your lecture notes by topic, you will find that if you go under BizOrg, right, you will find that there is a separate direct Cleo analysis of Guilford Motors itself, the case. And in that case, we have discussed a lot of these terms in detail, which I'm discussing now, which is that we talked about a restrictive covenant. Okay, a covenant is just a kind of a clause which usually contains some kind of a agreement or some kind of a restrictive condition. So you put this into the terms of a loan agreement and things like that. So in this case, it was put into the employment contract. And as you know, that in the case of these things we all discussed, we discussed all these matters earlier, which is that in the common law, when we in general, there is a bar on having these kind of restrictive covenants. Any kind of a clause in restraint of trade is generally void, but there are certain well-defined exceptions where the court will actually allow these kinds of restrictive covenants, or basically clauses in restraint of trade, and which are called non-compete clauses in these employment contracts. They will be allowed to be upheld under certain circumstances, which are well defined by the case law, and which you saw discussed in the Guilford Motors case, right? But in this case, he had this contract which basically barred him from soliciting the customers for a period of 2 years, okay? And we can assume that the geographical area is quite well defined as well. Let's assume that this company operates PV operates in only one city, right? And so it is defined in terms of it's geographically limited and limited in terms of time as well, right? So we have so he agreed not to solicit any of the customers of. So this kind of thing is called a non-compete clause, right? So Now, what he did was eventually he resigned. He used to work as a managing director. Then David Doyle, we can call him DD, okay? And this is PV, right? So DD resigns, and he and this one is actually PV. We can call this company PV, right? Right, so in this case what happens, he resigns from the company and he sets up a new company, right, where he is the sole director and the majority shareholder, and the remaining shares are held by his wife and his business associates. So one of the things that happens in the Guilford Motors case is actually, so this guy doesn't really want to adhere to this covenant. He doesn't want to adhere to this restrictive covenant. He wants to actually cheat on this. So what he does is sets up a company, Doyle Dealerships, okay? You can call it DDL, okay? And he's the sole director. And then what he does is that so we'll call this company, so his name is DD. Let's call the company DDL. So make it slightly different. This is very important that he does not directly do this. Okay, he's doing it through the Doyle Dealerships company. So through DDL, he's soliciting the company's, so PV's customers. So obviously, as a managing director, he had access to the full customer list. He knew all the customers, right? And so when he leaves PV, he sets up his own company, DDL. And now through DDL, he is soliciting the customers of PV, which, remember, he is not allowed to do under the terms of his contract, right? He's not allowed to do that under the terms of his contract, so he is breaching his terms of contract. Right. So, but notice that he is doing it through the company, DDL. He is soliciting the customers of PV through DDL, not in person, okay? But he may have gone in person, but he is going as the representative or employee of DDL. And we already know from Lee versus Lee's Air Farming that a person can be a majority air shareholder as well as an employee, right? And he's a director, okay, and majority shareholder as well. So this is the key part, okay? So now PV finds out that this guy is actually soliciting their customers and taking away their business. That's why this is called a non-compete clause. He's, as a former employee, he's competing with the former employer. So they sue this person, okay, and they ask for an injunction. An injunction is something we didn't have time to study it in detail. An injunction normally is something that prevents you from doing something, okay? There's one exception to that, which is a mandatory injunction, which is actually requires you to actively do something, but generally an injunction prevents you from doing something. So they're seeking, PV has sought an injunction to stop Mr. Doyle and his company as well, DDL. They actually sought the injunction as against both the company and Mr. Doyle, okay? And so we can say, okay, and DDL, because the company is basically, again, in this case, as you will see, that they have a position with respect to the corporate veil. They have a view on that, and in this case, PV is actually asking, as you will see from the facts of this case, and this is also something that you should try to bring out if you get a corporate veil-based case. Then that what is one of the parties trying to say about the corporate veil? Here, PV is actually arguing for the corporate veil to be lifted. PV is actually arguing that the corporate veil between DD and DDL should be lifted, because they're going to say that this DDL company is basically a sham. It's a fraud. It is set up purely to avoid a pre-existing legal obligation, which is his the non-compete clause in his employment contract, right? And remember that one of the judicial reasons, if you go back to your business organization notes, where are your notes here? Let's go back to your notes on business organization, okay? I should write this part here, I should write it as optional so that people don't get confused. It's so much work to be done for the exam. Wait, how did this become, this is not what I intended, okay? So, stock versus flow, all this discussion we had, this is actually optional. So let's put this in italics, so that, right? Okay. Right. Now, we should have those connections, but anyway, this is captured in the recording, so it's fine. Right? So, what was I talking about? Yeah, why did I come here? Again, I think in this one also we need to have this line spacing. Yeah, it's better now. Okay. So if we go down and see with respect to the corporate veil, right? Yeah, the corporate veil, which separates the members or equity shareholders from the corporation itself, okay? Yeah, there are certain judicial reasons, and since we are, in this module, our focus is more of a common law focus, which is try to understand how judicial precedents are used to win cases, to support your arguments and win cases. So we are basically focusing mainly on the judicial reasons or criteria for lifting the corporate veil. So by default, of course, we don't lift the corporate veil. We treat it as a very strong principle. But in certain circumstances, we may lift the corporate veil. So this is basically where you will be able to lift the corporate veil. And what I'm trying to show you is, why is PV trying to argue that that DDL, the company, and DD, Mr. Doyle, are one and the same? And they're arguing for the court, they're basically requesting the court to lift the corporate veil and treat these two entities as the same. Why? Because they are saying that this company is a fraud and a sham set up for the sole purpose of evading a prior contractual obligation, pre-existing legal liability, okay? This is the key part. Why are they asking for that? Because why are they making this case? Because they know that these are established judicial criteria for lifting the veil. So when you come to the court, you should already know what kind of things the court will recognize, right? What kind of arguments the court will accept. So because they know that any kind of company set up to evade a pre-existing legal liability, if such is the case, then the court will lift the corporate veil. That is one of the judicial reasons for lifting it, right? So that's why this company is making this kind of argument, right? So they're saying that DDL and DD are the same, are one and the same, because DD has set up DDL just to evade his pre-existing legal liability. Where is it coming from? Because he signed an employment contract, so there's a legal liability, and to the extent that it contains a non-complete clause, which is meant to come into force after he leaves the company. So now that non-compete clause is in force for 2 years, but this guy didn't wait for 2 years. He immediately set up DDL. So he set up this company purely to evade a pre-existing legal liability. Okay, and in this case, it is a contractual liability, not a tax liability or something, but it's a contractual liability, which is one type of legal liability, and it comes from his employment contract, and it's in that particular non-compete clause which he has signed and agreed to, right? So they're basically suing him for breach of contract, and they're basically saying that there should be an injunction against both Mr. Doyle and the company, all right? And what is Mr. Doyle's argument? If you remember, we discussed this in the class. When we discussed, so I'm not going to spend that much time on it. I have to keep a sharp eye on the clock because we need to cover 2 cases, right? Okay. So I think we can, we spent 35 minutes, so about 17 minutes each. We have enough time actually. Okay, so what is Mr. Doyle saying? I'm giving you the refresher of that argument, but we already discussed it in great detail earlier, right? What is Mr. Doyle saying? That I think we have it somewhere in our calc file under T5. Yeah, it was something like this basically. We actually discussed the case of we can discuss it with respect to this format. Okay, so here is basically, if you say this is DD in this case, in this particular case, okay, that is Mr. Doyle, and in this case this is DDL, right? And we have this concept of, so later on I'll wipe this out because you won't remember which case it refers to. So in this case, what's going to happen, and what is Mr. DD saying in his defense in court? He's saying that, look, and there's also the matter of privity of contract, okay? So there's also the matter of privity of contract. So there is a contract between DD. Maybe I should do a separate chart for this. You should understand that argument. We have done it before. Yeah, there it is, okay? So let's understand with respect to this. Let's take the case of Guilford Motors versus Horn itself, because in this case we can put PV over here, okay, and DD is over here, and DDL is over here, okay, and so there is a privity of contract. So we already discussed this in great detail, and we should put a little gap between these two, so that you know that these are separate cases. Yeah. So now here you can see that this case is dealing with this particular matter. Okay, so we can put this over here. Maybe we can put another, right? And put this in this one block. Okay. So in this case, what's happening? There is this. What is Mr. DD saying? What is his argument? He's saying, look, because of the principle of privity of contract, I understand that you have an employment contract with me, which now the non-compete clause is being enforced, but because of the privity of, this is the other side of privity of contract, right? Because privity of contract means that only these two people can sue each other, because the contract is between these two people, right? But what the other side of privity of contract is, that what the other side means is that you can't sue people who are not a party to the contract, right? So to the extent that PV is trying to bring an injunction against DDL, right? Mr. Horn is saying that let's not lift the corporate veil. This is a separate entity, DDL, right? And PV is complaining about a breach of a term in a contract, but that contract is only between me and PV. It is not, and does not involve DDL. So by a corollary of the principle of privity of contract, PV has no right to ask for an injunction against DDL, because whatever you're complaining about, that your customers are being solicited, that is being done by DDL. And DDL is free to do it, because DDL is not a party to this contract which contains the non-compete clause. Okay? You can imagine that this whole thing is also in a box here, that these two people have a contract between themselves, but DDL is not part of that contract, right? So therefore, DDL is not doing anything wrong. It has no obligation not to compete against the customers of PV, because they never agreed to any such thing. They are not a party to this contract. So that is Mr. Horn's argument. He's trying to use a corollary of the principle of privity of contract, and saying that and basically also use the principle of the separate legal personality to argue that this company has no obligation not to solicit the customers of PV. Okay, so this is the tussle. This is the legal issue in this case, that should the corporate veil be lifted. Let's look at this here. Okay. So there is also there's also another Latin term that I introduced at that time, that pax should be honored. Okay, this is that. What is that? What is the principle that this company is arguing for? That you have a contract with us, and you should honor that, and you should not set up a company separately for this. So let's see, we're running out of time, so let's look at the analysis of this case. So you'll get a question like this, okay? It'll say that you are the judge in this case, so use the Cleo framework to decide this case. And then you have to write your answer like this, okay? So in this, I'm not going to go through everything because we need to go on to the next case, but I've already pretty much explained the basic idea here, okay? Now, this is the central issue in this case, right? So as you saw in your notes file, that this is indeed one of the judicial criteria for lifting the corporate veil. Because in general, we do not lift the corporate veil. That is the default rule. But you can lift the veil when there are certain conditions present. And one of those is this one. Okay, so the question, okay, and was, in this particular case, was it a sham or a facade created by Doyle just to avoid a pre-existing contractual obligation? Okay. So this is actually a subset. A contractual obligation is one type of legal liability. Okay. So anyway, so we have very little time left, so we won't go into the details of that. Anyway, here you have law. Okay, what is the law? Separate legal personality. Yes, the default principle is established. Okay. Then what is the exception? Piercing the corporate veil. Okay, one of the well-established judicial criteria is when a person uses a company to evade an existing legal obligation, okay, and this is one type of legal obligation, then it's the evasion principle. It's a well-recognized principle, and the governing precedent, this is the key part of your answer, that you must be able to recognize that the facts given to you in the problem are similar to the facts of Guilford Motors versus Horn, right? So, and what did we decide in that case? That this is the situation, that we have, So it is basically about a pre-existing. This is the key part. Pre-existing is the key part, right? Because this is something you'll do in your next module. And oops, I wanted to do Control U. Yeah, pre-existing is the key part, right? So pre-existing is the. Actually, we don't need to write this as a modern clarifications. This is the principle actually, that it is a pre-existing legal liability and not to reduce a future liability. Okay, because future liability reduction, this goes into the area of tax planning. This is something we'll do in tax planning and tax avoidance, that we will do in the next semester when you have the module on taxation, right? Okay, so as you can see here, we've done this. Now I'll just wrap it up quickly. You can read it yourself. The court, basically in this case, the court will rule in favor of PV because the company is clearly being used by Doyle to evade a pre-existing contractual obligation, which is not allowed under the common law framework, for company law, where this becomes this is one of the recognized judicial criteria for lifting the veil. Now let's go to our last question. We have about 12 minutes left to wrap this up, which is, let's do this, and then let's also right, okay. So now we see this case. This is based on Daimler versus Continental. This is another case where the corporate veil is lifted for a very different reason. As we will see, the reason is the enemy character of the corporation. Okay, and so this is very similar to what is happening today in the case of, as you are aware, of the Ukraine conflict and how the Russian assets have been seized by many of the Western countries. So this is a very similar kind of idea, that the Russians had kept those assets under the control of the Western powers, and of course they trusted the system. But now suddenly, because of the conflict that has broken out, even though those countries are not officially at war with Russia, they have frozen their assets and they're threatening to use it and basically steal the assets. So anyway, let's quickly look at the facts of this case. So here's a company. It's an American company. Okay, remember that if you have, let's say, a company with all Canadian shareholders, but the company is registered in China under Chinese company law, we will call that a Chinese company. Okay, because it's registered. Why is it a Chinese company? Because it is registered under Chinese company law. Okay, it is registered in China under Chinese. So the shareholders are not relevant because they have a separate legal personality, right? So we will call that a Chinese company. So similarly, this is an American company, although it has 100% Japanese shareholders, except for one guy who was basically naturalized. He was also Japanese, but naturalized American citizen, but basically majority Japanese shareholders. Now, this is basically some transactions happened before the attack on Pearl Harbor. Okay, and some transactions, basically this company supplies, Pacific Steel supplies PS, supplies some materials, okay, to North American Engines, NAE, right? And after the supply of the contract, now the payment has not yet been made, okay, so you have a supply made under a contract, payment has been delayed, payment is deferred, which is quite normal in any business transactions. That's why you have accounts receivable, right? Why do you have accounts receivable? Because you have booked a sale, but you have given the customer credit, right? So it's a credit sale, so you have accounts receivable. So now this company is now asking for this payment. Okay, now in between what happens is that, so after the sale is made, after the delivery of the product is made, this alloy components are given to this company. Then the attack on Pearl Harbor happens by the Japanese, and the U.S. And Japan go to war. Basically, U.S. declares war on Japan, and after the attack on Pearl Harbor. So now the U.S. and Japan are at war. Okay. So now what happens is this company is now saying, so they're being asked to pay for the $500,000 of steel that they took. Okay, of alloy components that they took. Let's just say it's steel, right? So this 500,000, they have to pay $500,000. Now this company is saying that no, we don't have to pay because there is a law in the US banning the dealing with alien enemies, etc., right? So therefore what this American company is now saying, NAE, is actually, again, you can recognize that in this particular case, NAE is asking the court to lift the corporate veil. Why? Because they're saying, although this, as I mentioned, this is an American company, because it is registered in America under American corporate law, company law. So under one state, let's say, maybe it's in Delaware or somewhere where all the companies are, actually most of the companies are. So now, but now what is NAE saying? NAE is saying, no, this is, although it's an American company technically, but the shareholders are all Japanese. 99% of the shareholders are Japanese. So therefore, we should lift and because the US is now at war with Japan, and if we make a payment under this contract, we will be in violation of the Trading with the Enemy Act here. So the corporate veil should be lifted, okay? And now basically that the other party is saying, obviously Pacific Steel is saying, no, we are a American company, so the veil should not be lifted, the default rule. So as you will see in this particular case, now this is the question, okay? So you have to see this question, and you have to read the facts of this case and be able to recognize that the facts of this case are similar to Daimler versus Continental, which is Daimler versus Continental Tire and Rubber, which is a case of the similar case facts, okay? And we've also asked you to compare and contrast this with Makara versus Northern Assurance, okay? So in this case, what is happening? As you can see, these are general format, you can just look at those. Okay, now this is the issue in this case, an alien enemy based on, so essentially, based on the fact that, the two countries are at war, and now because the two countries are at war and there is a ban on trading with the enemy. So the question really, it's a battle between two legal principles. Okay, so one is the second one is not really a principle; it's a law, where many countries have this kind of law, which is ban on trading with the enemy. So when the two countries are at war, you cannot trade with the enemy, right? Because you're giving, you're essentially helping the enemy. So that's one law, one type of law, and the other more important legal principle is the principle of the corporate veil. That is, this company has a separate legal personality, right? So ordinarily you should not lift the corporate veil. So that's the more important legal principle. So the question is, can the alien enemy principle, that is not dealing with the enemy, is it so powerful that it can be used to lift the corporate veil? That's the question, okay? And as we will see here, that again, first of all, we always talk about the Solomon case because it's the most important case in company law. That sets the general rule. The general rule is don't lift the corporate veil. But we have an exception. Again, if you go back to your notes, under the corporate veil, there are some judicial criteria for lifting the corporate veil, and one of them is public policy considerations. Public policy considerations is a broad umbrella term which can include all kinds of public policy considerations, and one of those is the enemy character of the shareholders in wartime, right? So this rule gets applied in this particular case, because in this case you will see that now the US and Japan are at war, and the majority shareholders in this company are Japanese, right? So this principle, this well-established judicial principle that comes from the case of Daimler versus Continental Tire and Rubber, this happened during the First World War. We are now talking about the Second World War, and this happened during the First World War, okay? And so you can see that the House of Lords, whether it's an enemy, so in this particular case, the veil was lifted, right? So Daimler was a British company. Both were British companies technically, but Continental Tire and Rubber had majority German shareholders, and Germany and England were at war at that time, right? So the court lifted the corporate veil in that case, and so now they're saying that they should do the same here, okay? Now, what is this here? So basically the rule in the law that is being established here is that when a war breaks out, okay, if the shareholders, when the war breaks out, the shareholders' character will be taken into consideration. If the shareholders are from the enemy country, majority shareholders, then we will lift the corporate veil. So they're basically saying that the enemy, trading with the enemy act is more important than the principle of the corporate veil, right? Okay, what is the right here? So in this, so in this case, what is happening is that they're lifting the corporate veil. Now, what is the contrast with Makora? That is, in Makora, the company did not lift the corporate veil, right? So in this case, why are we talking about the assets? So what is the difference is that in Makora, the company said that the court said that the company's assets are not the assets of the shareholder, right? Because the timber belonged to the company and it did not belong to the majority shareholder. In Daimler, what happens? They lift the corporate veil, and in this case, they say that the assets of the company are the assets of the shareholder. Because remember, what is the type of payment? The type of payment is actually a trade debt, which represents accounts receivable on the books of Continental, right? In the famous case, and in this case, it's of Pacific Holdings, or whatever the name of the company is, right? So in this case, this represents basically here Pacific Steel. Why are we talking about the assets? Because what happens when you have this transaction? When PS supplies materials to NAE and does not collect the payment. So what do you have on the balance sheet of PS? You have an accounts receivable. Do you understand? Yes? You have accounts receivable, and accounts receivable sits on the asset side. So it's an asset of PS. So now we are saying that the contrast between this and Makara is that in Makara, the asset of the company is considered not to be the asset of the shareholder because the veil is not pierced. In Daimler, the court pierces the corporate veil and treats the asset of the company as the asset of the shareholder because of the Trading with the Enemy Act. They lift the veil. So, asset of the company is the accounts receivable, which is the amount that is being asked for, which is being sought to be paid by the by Pacific Steel in this case, right? So in this case, they will lose the case, okay, because of the principle of Daimler versus Continental. Under public policy, the corporate veil is disregarded because this is one of the reasons for lifting the corporate veil. Okay, okay, okay. So we'll finish off here. I'll just wrap it up quickly, and so we'll just take some time to do the attendance. And so now this is the outcome in this case. Again, what is happening is, because of the facts of the case matching Daimler versus Continental, the court is going to lift the corporate veil and say that the assets of the corporation, assets of Pacific Steel, which is the accounts receivable of Pacific Steel, is the accounts receivable of the enemy Japanese shareholders. Is this clear? Have you understood? Right? So they lift the corporate veil and therefore they say we can't pay to the enemy. So effectively they treat the company and the enemy as the same. All right. Okay. So this is the end of it. So please practice all this stuff and please study hard and do well in your exam. And as I said, write carefully. Hopefully everybody will pass. Okay. Many of the students have not been paying attention in the class, but you have an advantage in that all the recordings are made available. Okay. So this one will also be uploaded by tonight. Not maybe tonight, maybe by early morning tomorrow. But it will be uploaded. So everything is available for you. You can replay the classes and revise properly. You have plenty of time. So get yourself ready. Okay, now let's move to attendance. Okay, so let's quickly wrap up the attendance because today we want to finish on time the whole class. Right. Here's our attendance. Okay. Right, let's go here now. Try to. Is the font big enough on the last bench? Ian, can you see? Can you read the names? Okay. That's you. Okay. I'll go on. Okay, Brooklyn is here. Irfan. Yes? Not here? That's you? Okay. Edmund is here. Okay. Okay. This is number 16. Ian is here. Okay. Jane is here. Okay. Yes. Not here? This person is not here? No? Hmm. 32. So Lily is here.
She has sent a message to you.
Okay, we'll do it then. She's not here or something. She has to go somewhere.
Yes, she went to the doctor.
Or she wants to see the doctor. So since I'll not be meeting you guys now before the exam, so I'll just change her name. I'll just give her a present with, I'm assuming that she'll get, okay. Miliko is here, Helen is here. Jung? That's you, okay. Liv is here, okay, normally sit here, okay. This is you? Yeah, okay. Next is Lou. Okay. Okay.
She went to Beijing for a job interview.
Huh?
She went to Beijing for a job interview, and she's
Okay.
not here.
Okay.
But she have already told our tutor.
She's got the permission from Duffy.
Yes.
Okay, one mistake I made here was I didn't stop the recording, so all this attendance is being recorded.